Good evening. After a very late start and a lot of technical hitches, I'd like to welcome you to the first seminar for 2024. And before we get going, I'd like to acknowledge the traditional custodians of the country throughout Australia and their commitment to land, sea and community. We pay our respects to elders, past, present, and extend that respect to all Aboriginal and Torres Strait Islander peoples today. Well, after a very stressful start, I'd just like to say that, that we're going to continue the general theme for the seminar series, which is manufacturing for startups. And I'm really excited to introduce Peter Rowland today. Peter is the founder and former CEO of Micro-X. For those that don't know Micro-X, Micro-X is an Adelaide-based deep tech company that has developed lightweight X-ray imaging solutions. Peter founded Micro-X in 2011 and led its development through ASX listing and global expansion until his recent retirement last year. Peter did a B.Sc in electrical and electronic engineering at Queen's Uni in Belfast and an M.B.A at the University of Strathclyde. There are many highlights in his career. It was quite a list, but included being recognised as one of Australia's top 100 innovators by the Australian newspaper in 2021. On a very recent note, he has just been appointed to the newly established Industry Growth Program Committee by Minister Husic, I should say. Welcome, Peter.
Thank you, John.
Now, look, before I hand it over to you, I'd just like to acknowledge that we're not really going to go into Micro-X's technology today. We're going to actually talk about the financial journey. And, you know, I've spoken about this before, the struggles for a startup to actually not only get going, but actually support the development of the technology that they're trying to develop and manufacture it at scale and then get it into market. So Peter's going to touch all of those bases. Over to you, Peter. I'll let you go.
Thank you very much. You can see my PowerPoint now.
When Peter tells me to start, let me know.
Yeah. Okay. So what I was going to do, I would like to just introduce the company to start with, because understanding the funding journey, I think, just comes to life a little bit more if you know it's kind of like, if you know what the end game is, then the journey probably it gives you context for what the journey is and how it works. So I wanted just to give you an idea of the kind of the company. We made a video a couple of years ago. It was when I was still chief executive, just to talk about the company's culture and what it's like to be in the company. So Matthew, can you kick off that video?
Picture an innovation. Now think of something a little more invisible.
Now picture an engineer.
What are their traits?
Academic,
Practical,
Logical. But what about
creativity
and courage. Finally, picture an X-ray device.
but what about this?
Welcome to Micro-X.
Scientific progress is about asking questions.
Take any product and ask,
What if there's another way?
elegant.
Smaller,
Lighter,
Simpler.
streamlined.
That's what we do.
we find a new way.
We're a company that believes in possibility.
Our quest is to engineer new ways.
We probe the edges of what is possible.
Innovation is our drive.
And creativity our compass.
And our first contribution
Is the carbon nanotube.
A revolution in lightweight X-ray imaging. When I first saw a carbon nanotube emitter producing X-rays, I knew that this technology had the potential to change the world of X-ray imaging. From this idea, a great journey began. Micro-X is about seeing things differently, about being curious, about listening, and then imagining. Above all, Micro-X is the power of a great idea.
Imagination, creativity, and tenacity. I think they are the most important traits of our team. Imagination to dream, creativity to solve problems, and the tenacity to endure the setbacks. This technology opens up a door to a whole world of applications.
If we don't have a robust production process, then we fail. Our technology is so high tech that any variation is unacceptable. But that's what's in our blood. We live and breathe quality. That's why we're able to develop and manufacture the carbon nanotube. We're dedicated to quality, we're committed to excellence, and we have a culture that nothing is impossible.
When I go to work in the morning, I go to be challenged, to push for progress, to make something better, to really think about what the customers need. There's an attitude here that's really about believing in what's possible.
Our carbon nanotube technology is a platform for many new modalities in X-ray. The possibilities are endless.
We've got the tools, the team, and the attitude to be able to build anything.
I'm proud to be working on technology that's going to be in the textbooks of the future.
This amazing team of passionate people is building a powerhouse of a company that will bring these game-changing products to customers all over the world. Soon, many more people will be seeing things differently.
Are we live? Good. So, is that screen share working okay? All right. So the company Micro-X, the core technology in Micro-X is a new way of making X-rays, which allows us to miniaturize it, and because it's electronically controlled, you can do interesting things with it. It being a platform technology, we had a launch product which was the focus of the early years, which we call mobile DR. The rover is a mobile digital radiology medical X-ray device that's about 20% of the size, weight, and of a conventional mobile X-ray. And that was where we sort of proved the technology. We then branched into a defense application, which led into some other security business of in checkpoints, and then the kind of centerpiece of the company is a new CT. So I'll touch briefly on those. That's the first product there. Obviously in hospitals, but when you make a mobile X-ray so small and light, you can do door-to-door X-rays. We've got a service here in Adelaide doing exactly that, doing X-rays in someone's front room, and the Army are using it now in deployable hospital facilities. We also have about a dozen units operating in the front line in Ukraine at the moment, which makes everyone very proud to be part of that effort. As I said, the next clever bit of technology was an X-ray that works like Superman vision, where you don't have to put a detector behind the object of interest, but rather you can form an image from the reflected X-rays, which allows in security applications like this of bomb detection, much safer way of operating. But I think when the history books are written, the thing that Micro-X will be remembered most for is CT, because whereas using conventional X-ray technology, where you have to spin the X-ray tube in a giant donut around the patient. I think the smallest and lightest CT in the world is about 3/4 of a ton. And this little baby here, which will go into flying doctors, as well as being small enough to go into every ambulance, is about 50 kilograms. So really revolutionizing the way we can do imaging here. Where you're most likely to see Micro-X technology is in American airports in probably 2 to 3 years. We've just delivered the first 2 prototypes of the hand luggage scanner. We've got about 30 million in contracts from the Department of Homeland Security. It's the TSA that runs all airport security in American airports. And we're actually prime contractor for the whole scanner, as well as a self-service portal. So the concept here is it's like expanding passport control, which is all automated now, to include body scanning and your hand luggage scanning. And I think the first one of these will be operating in a US airport. You'll see them in probably 2 to 3 years from now. So that will make the life of the traveler an awful lot more pleasant. So that's the company that is Micro-X. How did we get here? Look, the key thing is planning the funding. You start off with an idea, and how do you plan that funding journey? Now, my background was in the aerospace industry, and of course, if you think about how airplanes are designed and funded these days, it kind of they don't start by building a prototype and then fly it to places and see if they can interest anyone. They start with a paper design, and they use the engineering to work out what the range and the payload and the costs are likely to be, and then they start talking to potential customers, and they get the feedback from customers who say, if you tweak it a little bit and you add a bit of this or subtract a bit of that, then we'll sign up for so many units. And when they've got, orders, conditional orders for a few hundred units, then they can take that to the bank to borrow the money to actually go out and design the thing. And so that was how we started in Micro-X. It was the same concept. To get enough credibility to raise the money, we needed some partnering. I took the concept of an ultra lightweight mobile X-ray to the company who was then the leader in mobile medical X-ray, Carestream Health. Originally, that had been actually part of Kodak Medical Imaging. And they loved the idea, signed a deal, a bit like the airlines, that said, okay, if you develop this and it works the way you're promising, then we will sign up to a distribution contract. And that credibility and path to market was what we needed to get investors on board to pay for the development. We originally partnered for the technology development with a company in North Carolina. That turned out not to end quite so well, so we ended up having to bring that in-house during the journey, which was, again, probably lucky, because if we tried that initially, it probably wouldn't have worked. So the investment we needed, of course, was not only to finish the R&D of the technology, but to design the product. And obviously, with a medical device, you've got the issues that design has to be done, by an organization and recorded according to an ISO 13485 accredited QMS. And of course, eventually, when you've got it, you've got manufacturing infrastructure to invest in, including a quality management system and all the supply chain that you need before you can make your first units for sales. Marketing and sales obviously has to be paid for. So the journey involves an awful lot of finance to get from an idea to something that you can sell in world markets. Because we had a platform technology as well, we had to decide whether we were going to do all our products sequentially or to some measure in parallel. And I'll talk about that a little bit later. So the journey, our journey, like everyone else's, starts with grants. The grant funding is really essential to get your proof of concept, and that really de-risks the investment for everyone. A big shout out from, in the Micro-X case, it was the small technology industry uptake program that the Victorian government launched that we got about $350,000 in 3 grants from them to prove the technology, and that was what got the idea and off to the races. I must, as John mentioned, because of my recent appointment to the assessment committee, but should mention the industry growth program, which newly launched by the federal government, which is designed to provide funding for exactly this sort of stage in the journey when no one else wants to look at you. Early investors following the grant, they're the hardest to find. Once you find them, they tend to be very loyal. They tend to be very sticky investors. Often they are the 3 Fs, as they're known: fools, family, and friends. But often high net worths and family offices. Is there it's all about networking. Our whole journey was kind of paused for about 18 months to actually find the funding that we needed. And you've just got to keep at it and network, and eventually you find someone who knows someone who thinks it's a good idea to invest, and he talks to his friends. But there is no shortcut. There's no golden bullet here to solve this problem. You have got to kiss a lot of frogs to find your funding princess. To these early investors, the passion of what you're doing is really important. They respond to that, and I'd have to say impact as well, because they like to think that they're funding something that's going to make a difference. It's not just an investment. The investment proposal, obviously the quality of the investment proposal that you give to your early stage investors is critical. And it needs to be double-headed, because you've got to have a short-term path that shows why you need, how much money you need, and what that pathway is, what you're looking to raise, and where that gets you to. Because investors get very worried about getting dragged into something, and then you run out of funding, and they know you're coming back for more and more. So that short-term path is critical, but what sells them is the long-term dream. Is that this is going global and it's going to be big, and you are going to build something really large and worthwhile. Because that's why they invest. The short-term path is just the logistics of how you get there. We had a platform technology, as I said, because it was an X-ray tube, and there were lots of things that we could apply that to. A big selling point was spin-off products as the technology evolves, and sure enough, that's happened. We went to market just with a bedside X-ray, and then suddenly it was security and and then CT. That was attractive to investors because they're not that keen on a one-trick pony. Because you absolutely have to get it right if it's a one-trick pony, and right not just in terms of the technology, but that the market's ready for it and you can get to it in a reasonable time. They love the fact that there's value in the core IP in multiple different applications, because then that, down the track gives strategies for spin-offs, which is a scaling model that might be quite attractive as well. No question, the big majority of investors today, including institutional investors in Micro-X, invested specifically because we're a manufacturing company, and they see in manufacturing a sustainable intellectual property that that isn't, it basically provides a barrier to entry, and gives a momentum to the company because it is actually manufactured, and the technology is controlled by manufacturing it in the same place that it's designed. That was a really big draw card for the investors in Micro-X. They love we were in medical and security markets. They're two very good markets. Obviously, medical is perennial and growing, and similarly with security, you're in two markets there that insulates you somewhat from the ups and downs of the global economics. They're looking for global reach with large total accessible markets. So if you do hit the goal, then the numbers are very big because it's a global product, and they're looking for a global strategy. The Australian market is nice and it's local, but it's in medical devices, it's 3% of global demand. And 3% of global demand isn't the starting point for a great strategy. The early IPO, an Australian phenomenon. The funny looks I got every time I was in America. I was introducing the company in the early days and saying we're a pre-revenue listed company, and everyone would go, "Pardon? What do you mean? How can you possibly be pre-revenue and listed?" Because that just would never happen in the US. It's not as bad today as it was 10 years ago, as we were approaching nearly 10 years we've been listed. But we went there because basically we had to. A lot of the early investors we got, and pre-IPO we had at least 3 institutional investors on the register, but they came in on the basis that we were going to IPO. We couldn't get interest from venture capitalists or private equity firms at that point. I think at that point they were much more interested in the pharma, in medical technology rather than medical devices. But I think that's changing somewhat. And for the company, the comfort of being listed really does give you future access to capital. Now, sometimes that can be ugly because you're raising capital at a price that hurts, but you are raising capital. I mean, you will get a raise away. It's just a matter of the price, and that's that is good for security. And if things and times are tough. Going to an IPO, yes, you need brokers. You need two good brokers to get you away, to bring their clients in, to raise the awareness in the stock and the investment proposition. Is it a brutal process? Absolutely. Firstly, we had to change from being a PTY company to being a public company. and then obviously show compliance with all the listing rules on top of that. But the due diligence process in the prospectus that we lodged was frightening. I can still remember the 2 days before the IPA launched, doing the final review of the due diligence document, which I think was about 200 pages, and we started reviewing it at 9 o'clock in the morning, and we finished at 11:30 that night without a break. So there is a lot of work because every single statement you make in your prospectus has to be checked and double checked, and the references provided to show that you're not telling porkies to the market. And of course, the pricing of the launch is a real skill. So how you do that, again, there's no rule book, but it's skilled players help you out with. Obviously, you've got to get the price right, because if you launch at a price and it closes that day at half the price you launched at, then you got it wrong, and a lot of people take a bath. We obviously got it about right, because we kind of went up 10% during the first day's trading, and then settle back to roughly there. So the world since then in capital raising for a listed company is that's all interesting. Key thing is brokers. We decided not to. A lot of companies use a different broker each time they go out for a capital raise. I've been a believer in kind of long-term partnerships, wanted to work with a long-term partner. We struck a deal at the highest level with Morgans, who were great, and who've been the core of every capital raise since then. They know the company. They've got a huge retail network, and they publicize the stock, and they write research, put out quarterly research on the company to all their investors. So key thing is making that relationship with a good broking firm. As you're approaching a capital raise, it can be interesting if the market senses you're about to do a capital raise. Your share price will fall horribly, because a lot of people will think that they can sell their shares and then buy them back in a placement at a discounted price, and they've made a nice little profit along the way. So the whole process of building the book of who's going to invest really kind of starts a few weeks before you actually go live. You kind of sound people out. Of course, nobody, even institutions that are already on the register, wants to be the first. Everybody wants to know who else is committed into a raise. So finding your cornerstone is the key. Who's the one institution that's guaranteed in at the price that you've decided to go at. And then when you say, oh well, they're in, then other people will come, often pro rata or more. Getting a capital raise underwritten is hard to do. We managed it once, but particularly in the kind of risk-off environment that we've got right now, getting someone who's prepared to underwrite a capital raise is pretty hard. Nice if you can do it. Obviously, the story for your capital raise has to be good. What are you going to use the funds for? They want to know that you're going to use the funds to expand the business, not just fund working capital. And of course, the valuation of the pricing for the raise is key. When markets are very risk averse, as they are now, you'll see capital raises going out at anything up to a 30% discount to the VWAP. The VWAP, of course, being the volume weighted average price over the last 15 or 20 days, which is the sort of benchmark that you use. And that discount is an incentive for people to invest. The implication being is you'll invest at that discount, and then the shares will bounce back to something closer to your VWAP. You then go through this lovely game of wall crossing. The concept of wall crossing that refers to the Chinese wall that exists in a lot of broking organizations, where you've got the retail side, which only deals in the public domain, and you've got the corporate side, where you can basically make a corporate side of a broking firm an insider by getting them to cross the wall and say, right, I'm going to give you information now. And when you're in receipt of that information, you're not allowed to trade. And they say, okay, yeah, I'm prepared to not trade in your stock. And it's a God's honor kind of thing. So they don't trade the stock, and you say, we're going to do a capital raise in a few days, and this is going to be the price, and this is what are you up for? So that process of wall crossing your prospective targets is key. And then you build the book then with the people who you think have given you indications. And then the exciting moment is you notify the ASX, tell the ASX you're going into a trading halt for 48 hours because of a capital raise, and then you've got 48 hours to get all the people who promised that they'd make an investment to sign up a commitment before the trading resumes after the suspension. In a placement, which is what I'm talking about, you can place up to 15% of the number of shares that are currently on issues without a prospectus or without a special general meeting of shareholders. So that placement capacity of 15% of the total number of shares on issue is generally what limits how much capital you can raise, and obviously the pricing, because the capacity is defined by number of shares. The pricing then follows then how much you can raise. And as I mentioned, the pricing and discounts, can, if you in a difficult market, we've done them at 20% discount. In a more buoyant bull market, we've got it as low as 5%. So again, it's the market conditions. If you've done it very well, you can get more demand. In other words, you get more people signing up than what you're allowed to issue under your placement capacity. So you end up scaling the investors back. They ask for so many shares, and you say, well, you can have half what you asked for. And you have interesting meetings where you decide which of your investors you want to give more to and which you want to give less to. Some institutional investors are very good and very sticky and very committed for the long term. Others say they are, but will participate in a raise and turn around and sell it a week later. So you get to learn the joys of the different institutional investors. And then, of course, you can also add to that what's called an SPP, which is share placement plan. One of the things about a placement as a way of raising money, it's obviously you're talking to the institutional investors, but the mums and dads and some of your early stage investors that came on board get annoyed that they weren't invited to invest more at a discount. And so quite often you'll do either a rights issue where you're allowed to make an additional investment at the same price as you're offering in the placement, pro rata according to the number of shares you own. In an SPP, you can invest up to, I think it's a cash limit of like $30,000 of shares, no matter what your shareholding is, whether you've got one or tens of millions. And that's a simpler system because it doesn't require a prospectus. So the joys of capital raising in a listed company are quite a procedure, but it's been very good. Life as a listed company, you're doing quarterlies, obviously, because until you get significant cash positive results, you're required to put out quarterly cash flow statements, because obviously there's a risk to companies until the cash flows are solid. And you have to, in the quarterlies, describe what's happening to the company and give everyone updates. Difficult communication because you're ready to primarily to investors, but everybody reads it because it's on the ASX platform. So you've got to think about how your customers and your partners and your employees and your suppliers view the information that you're putting in your quarterlies. So that can be quite a stressful time as well, particularly if you do a telephone call where people can ask you difficult questions. Investor relations are really important. Unfortunately, the concept of saying, here's our plan, and we'll get back to you if it changes, doesn't work. If investors don't hear from the company for 3 or 4 weeks, they kind of assume that you're either dead or dying. So you have to keep the frequency of news up, just to remind everyone that you're there and life is good. And so a lot of events and publicity is important. Skirting the laws of continuous disclosure, always fun for a startup company. You get exemptions, of course, for stuff that's confidential, but what is confidential and may be retained and what can't, must be disclosed is something that you've got to manage very, very carefully, and particularly around a capital raising, because it's very, very naughty to fail to disclose anything in a capital raise. And once you've done a capital raising, you have to do what's called a cleansing notice, where you swear on a Bible that you've told the market absolutely everything about the company at the completion of a capital raise. The pricing trap I talk about is a hard thing, because of course for early stage companies, the market doesn't really know how to value pre-revenue companies. There is no science to it. If you're addressing a really large market, you've got a reasonable chance of capturing a slice of that large market. They'll give you a good valuation, but it's just based on sentiment, really. There's nothing objective. Of course, as soon as you start sales of your first product, then the market goes, all right, we know how to value you now, and there's a DCF model on your sales, and so they look at your future sales and anticipated future sales growth and do a DCF on that and give you a valuation based on that. And of course, when you start off with a new product, particularly if it's a disruptive product, your initial sales are very small, so your valuation suffers hugely from the blue sky model to actually this is what your first half year sales are. That's hard. The other point I'd like to make about life as a listed company, my first gig as a CEO of a listed company was with a company called LX, ophthalmic laser company here in Adelaide, and absolutely new to this whole thing about being a listed company. we reported our first half yearly results, and I went up to Sydney to talk to the investors, the institutional investors that were major shareholders. Very first meeting, I was actually taking some quite good results with me, like 25% increase in profit and in revenue. So I was thinking, investors should be reasonably happy. And anyway, my first meeting was with this funds manager in the institution, who asked me grumpy questions about free cash flow and all the rest. And I thought, oh, crikey, I wouldn't like to come here if I was delivering a bad result. But anyway, at the end of a kind of difficult 10 minutes, the meeting finished, and he said, "Oh, I'll walk you to the lift." And I went, "Okay, now I'm getting escorted from the premises. This is good." So when there was just the two of us walking to the elevator, he said, "Oh, look," he said, "you seem like a decent fellow." He said, I think you know how to grow a company. Let me give you some advice." And I went, "Okay." And he said, "Whatever you do, don't listen to pricks like me." And I kind of, pardon? He said, "If you listen to investors and give investors what they ask for, you will never grow a company, because what makes investors happy is all short-term sugar hits. And you never will grow a company in the long term with short-term sugar hits." And it points out what I'm calling a strategic conundrum with listed companies. Exactly that. The long-term growth makes you've got to take some difficult decisions that don't necessarily give you the short-term growth that all the investors want. If they only wanted to own your shares for 6 months and see some cash growth. But in the end, Micro-X, we've got a wonderful register with some very, very good sticky investors. That between I think something like 45% of the register is institutions, and then a lot of the retail stock owners are people who are quite believe in the stock long term, which means that there's not much liquidity in the stock, which means you get huge changes in the share price when someone sells 300 shares, which is its own problem. Evolution in the company will happen. Again, that can be difficult when you're listed, because people love to see sort of predictability. But new strategies and in Micro-X's growth, I mean the two big projects for the company, which will define its future in airport security and in CT imaging, are all things that emerged during the journey. That's what our funding series looked like. I present this for completeness. I'm not going to talk it through, but it's about $130 million we've raised over the time since the early seed investors in 2014. Each milestone is there's a story to it, and we don't have enough time to go into it today, but give you an idea of the sort of sums of money needed to raise a company of Micro-X's footprint. While I was researching for this presentation, just going through the time scales, you tend not to look behind, but when you look at the pitfalls that we fell into and the triumphs that we had along the way, these overnight successes do take a long time to get established, and things always take longer. So you need to plan with that. So just finish here on a couple of points in terms of our journey. Things that we got right in the story. Company purpose, again, the impact is important. Investors, both institutional and private investors, love to invest in a company that's going to do something that will make a difference, that will make life better in a global context. It's not just all about the money and the share price growth. And culture. The culture in the company is everything. You can get the best brains into a company, but if the culture isn't right, they will never operate at their best. And the energy and perseverance that flows from that culture and common purpose is what drives the company and what solves the seemingly insolvable problems. And if I had my time again, learn to own your disruption. If you're going to disrupt the market, be proud of it, because even though we tried to make our first product non-disruptive, that wasn't the way the market saw it. And so the uptake was slower because you've got to recognize that crossing the chasm of appealing to the early adopters. Every company on a journey like this should have a chief investment officer, because managing the strategy and tactics of your access to capital is key to doing it. And you learn it, but you need an expert if you're going to do it and do it properly. And it is a strategic game to plan how much to raise, what the company's going to look like when you've raised it, and what you've achieved, and what your next capital raise is going to look like, and that is a very strategic, very specialized area, which took us a while to get. And I think every company should have a chief investment officer. And don't try and grow up too quickly. Realizing that big companies are very, very different beings from small startups, and the way they operate and their cultures, their risk aversion, and of course the innovator's dilemma, all make things a little tricky. So that's me. Happy to open up to questions.
Well, look, thank you, Peter. That was fantastic. I've certainly got a few questions, and there's at least one in the Q&A. I encourage people to use the Q&A feature. How do we get Peter as the main screen? Or is he? So look, I'm going to start, and you kind of touched on this, I think, but Micro-X's share price at the moment, it's in the doldrums. Is that just reflecting that even though you've got all these orders, the market's just being negative? I'm really confused. You've got at least four product lines that all look like they're addressing great markets. They're disrupting those markets, and in some cases they're creating new markets. And you've got orders. What's affecting the share price the most at the moment? Is it just sentiment?
Market sentiment has been against tech stocks and non-profit making companies in the developmental stage for quite some time. The reality, and I think I mentioned it, is that the movements in shares every day are just tiny. You've got a lot of people who believe in the company and they've got a big stock holding and they're not selling. And so, the share price is somewhat randomized by, tens or, on a big day, 100,000 shares being sold. But it's everybody who some of our institutional investors are still buying on market to increase their position because they know it's going to move, and they know it's going to, when it starts to move in an environment like this, and who can tell, what if somebody starts buying one day and everyone goes, yeah, I know this stock's going to really move, and then suddenly everybody piles in, and overnight the thing jumps incredibly when everyone thinks the time for the big share reset has happened. But trying to predict or explain the share price is something that I've given up a long time ago.
Look,
you know, some really good news, and it just doesn't move, and you think, hang on, could this be?
Yeah, no, it's depressing. Look, from Andrew Smith, what arrangements were made with early investors, and how did you make it appetizing to them?
We no special arrangements. We've sold ordinary shares, so we didn't do anything cute in the early pre-IPO days. They were all, I think, almost all, invested because they thought it was a really exciting and big thing was going to happen, because we were going to change radiology.
Did they understand it was a 10-year journey?
Look, I'm not sure we understood it was a 10-year journey. We thought we were going to get there quicker, but I think all the big institutional funds know that it always takes longer. I did have one early investor not long ago who told me that the stock market is a wonderful wealth redistribution scheme. It redistributes wealth away from impatient people and gives it to people who are patient. So,
look,
I think that's true.
We've got a great question here, which I actually was going to touch on. Can you elaborate a bit on the company culture and how you navigate that while growing the company? And at what stage did you start to realize that culture is important?
Okay, the culture. The culture we established was a culture of empowerment, of flat structures, and it's not hierarchical, because we're trying to solve some really, really difficult technical problems, and there is no rule that says that only senior management have clever ideas. So I badly wanted to create a culture where everyone, the most junior people, are allowed, encouraged to challenge. Why are we doing this? Are we sure you've got this right? And we had one particular instance which really showed everyone the power of it. It was a young graduate who started. I mean, she'd been with the company like 3 months, and was doing something in our tube development, and called something that she wasn't happy with, and said, I don't think this is right. We should stop and look at this. And she was right, and she saved us hundreds of thousands of dollars. Everyone had missed it, And when you create a culture of debate, where, the issue is the primacy, you want better decisions, you debate them. And no matter whether you're the most senior or the most junior, if you've got a good idea, then debate it. If your idea is better than everyone else, then convince everyone that why you're right. And so when you argue about the debate, and it's not about ego, and it's not about status, then you solve problems, because everyone is encouraged to think, are we sure we've got this right? Because there's no one to follow. When you're doing something that no one's done before, you can't sort of say, oh, well, everybody does that. Well, because nobody's done this before. You don't know if you've got it right. There's nothing you can refer to. So you've got to keep challenging, because you build on some constructs, and it's a while before you can prove those constructs. So that's the core of the culture.
Look, I've got a great question from Moran. to what extent do you believe your past experience and network in aerospace helped you in your journey, particularly your first capital raise?
Look, I think I'm with Steve Jobs on who once said famously that he couldn't. I think it was when he made Apple the richest company in the world. He couldn't have done it without all the experiences he'd had in his career. And I'm very conscious of stuff that I did in defense, in aerospace, and other medical devices. Launching a disruptive surgical laser in the dental industry in California. All of those experiences they teach you things about the market and how to approach it and the pitfalls. And so I every part of my career is I've found myself drawing on experiences and telling people stories about what happened, and oh yeah, we thought this and look what happened. And that's I think that's a good I think a big part of a job of a CEO is to be a teacher. Teaching lessons that you've learned the hard way. Because that's how you move forward.
Look, I think we're running out of time, but I'm going to try and get one more in.
We're like an extra 5 minutes because we were late starting.
Well,
it's dreadful. We got a high technology company here, but we can't organize a Zoom call.
Yeah, don't ask me what went wrong. What does your journey reveal about the Australian innovation and startup ecosystem? Good or bad? ?
I number one, Australian engineers are some of the finest in the world. The level of innovation and skill and the way they approach problem solving is as good as you'll get absolutely anywhere. So we should be proud of the universities that give us engineers like that. We've got one of our staff as part of the Brain CT doing a PhD at Johns Hopkins in this new area, and I mean he's standing shoulder to shoulder with the best brains in medical imaging in Johns Hopkins in Baltimore. So we should be very proud here. I think what makes it hard is we're the opposite end of the scale of sort of Silicon Valley. Silicon Valley kind of works as a sort of an incubator, because if you're not starting a company or you're not working in a startup in Silicon Valley, everyone thinks you're a little weird. And here it's the reverse. So we sort of feel a bit like an endangered species. Everyone kind of hopes you survive, but there just aren't enough Micro-X like companies for what we do to be normal, and for companies and people to learn off each other and learn off the journeys. And one of the reasons I'm so happy to give a presentation like this is if what we've done and what we've learned, we want to share with as many people to inspire and inform and so we get lots more startup companies with a manufacturing focus happening.
I think you've hit something there. I do think Australia is highly innovative, but what we don't do is take on the big challenges very often. I think we maybe doubt ourselves or something. And Micro-X took on a really big challenge and rose to the occasion. I see a lot of Me Too companies, and they're not really challenging themselves. They might be solving a problem, but and it might be a big problem, but there's another 20 or 30 companies trying to solve the same problem. And we need to stretch ourselves a bit more, I think. When you think of the real standouts in the Australian stock market in the medical device space, they all stand alone. They're all world leaders in their space. It's a good learning opportunity. Look, I'm going to end it there. I think we're about to run out of time, and I want to thank Peter. I think that was fantastic. And I encourage everyone to log on for the next seminar in a couple of months. Thank you, everyone, and thank you, Peter, very much. Good night.
No, my pleasure. Thanks.